Hey, everybody, good afternoon. Welcome to 12-Minute Trading. Today is Monday, the 22nd of July. My name is Doc Severson. I am joined today by Dave Lukas over here from 12-Minute Trading. And we are happy to be back again with you guys as we get into the really the back half of the year. And if the last couple of weeks have been any indication, I think it's going to be an extremely entertaining peril-filled last few months of the year before we put this year to bed, and who knows, maybe even after that. So, Dave, what kind of stuff are you seeing on the horizon besides the obvious?
How do you call it these days with everything that we've got going on here? I mean, so every weekend it's like something new. Assassination attempt one weekend, the next weekend the president quits the race, and now nobody's seen the guy. I mean, there's rumors now circulating that he's terminally ill or something like that today. I don't know. And now we've got you're going to have turmoil in, who's the candidates and all that type of stuff is all going on. So I think that's going to continue to, that'll have some effect on the market. The market's priced in Trump for the win. That's where the market's at, regardless of your political beliefs, or that's what the market's priced in. And I don't think it changes much with the candidates and stuff right now, right? I think there's, a lot of the other stuff is known, it's priced in and stuff. I do think that if there really is something bigger wrong with the president and and the vice president has to take over, that might give the market some pause, because uncertainty, right? What are they going to do? Are they going to treat it like, their first 30 days and like as a new president and do a bunch of things, right? So what does that mean? So I think that maybe does something, but for now, we've had a volatile swoon down. We're having a relief rally today. I don't think I personally don't think it's the beginning of a next trend up yet. I think we're going to be in chop for a little while. I think you and I were talking earlier, and the SPX is probably maybe even range bound between 5,500, 5,600 right now. The Nasdaq's bouncing at a natural place. It was near the lower Bollinger Band on the daily chart. That's normal. The Russell's having a nice little relief bounce today after a lot of selling, but it still has a long way to go. Its energies are pretty exhausted. We'll pull those up and look at those on the charts and stuff too. And the Dow's kind of where the Russell is. The NDX and SPX are kind of together, and the Dow and the Russell are kind of together. It's really interesting, dichotomy in the markets right now between those indexes. So yeah, it's like every day's an adventure. I got that behind my head because it really is true. I mean, literally right now, every day is a new adventure in what these markets are doing and what they are. So that's kind of where we stand.
I'm going to bring this over here and take a look at the charts. And so here's the S&P 500, and there's a few interesting things to look at. So first of all, if we look at this through the major swing that we've had for the past, since last October, we've barely scratched the surface on this. So we get so used to these markets that barely move at all, or just move in one direction. And the first red candle that shows up, we lose our minds and we think that, the bear market of 2022 is starting all over again. So there is some thought here. And here, let me get my magic pen going on this thing here. There is some thought. There's a couple of different scenarios, which I think we're going to find out in the next week or so, which is going to play out. So if we look at this one here, we could see this is potential. Now, I don't expect this to happen, but there is the potential that we could see a V bottom from this, because we have trend is still pushing to the upside. So I guess for all the viewers out there, for those of you that are watching live, or if you're watching on a replay, don't discount the fact that could happen. I'm not saying it will happen. I think that's unlikely to happen, but I don't want to see you surprised if we end up printing above 5,700. What I think will likely happen, and this is going to what Dave was saying, is that I think we're probably stuck in a small range here for a little while until some certainty comes into the market one way or the other. And so this is what we call it a Darvas box. let me expand this so you can see this. I mean, think about that. That's just a very small part of this entire range. So we get so used to playing within such small ranges that when the volatility ticks up. So here's what that Darvas box looks like. If we see the price get above 5,600, it's very, very likely to go at least retest the highs again. But I think 5,600 will be difficult to get through on the first try. On the other hand, if we see the price break down below 5,500, probably heading for 5,400, and then we may see volatility expand with a series of lower highs and lower lows, and it may turn out to be another, let's see, where do we have that? It was August to October was that big pattern that we had back here. So almost exactly a year ago, we had this big, ugly pattern, good for 10% to the downside, 10.92% before this thing was finally finished to the downside. So I guess what I'm saying here, the final point is, guys, like, draw your box around here and don't be surprised if you see either of these broken through in the next, in the next few days or so. I think there's a good chance that by the end of this week, we will have much better clarity on whether the uptrend will resume or whether we're going to be in a corrective pattern. Now, Dave and I were talking about this before, but what makes sense is that we probably spend the next 6 weeks in a corrective pattern, because think about all the uncertainty that's out there, like with the political situation, tremendous uncertainty, even more now so than after last weekend. So there is no, I don't think there is a way to discount this election just yet. And the one factor that Dave talked about last week was when we were, or I guess we didn't talk last week, but 2 weeks ago was, hey, whether it's Trump or whether it's Biden, both are known quantities, so the market doesn't care which one. And all of a sudden, that's been thrown out the window.
Yep.
Because now the one thing that does torpedo that argument, though, is that whoever or whatever is behind Biden will not change. So whatever figurehead that they stick up there, whatever puppet master that they put in, that will not change because it'll be the same machine behind him. So
well, that's kind of the thing today is, like, right now it's Kamala Harris, the vice president. Well, it's the same. It's a lot of the same policies, Joe Biden and everything. So that's not going to really change, right? So that's not really going to make the markets change on that. So it would be if somebody, again, if he passed away and she steps in and starts doing stuff, then yes, that's some uncertainty for the markets because they don't know. But if it's, she's in with the same policies and keeps kind of that status quo, I think that market's banking on that some. Now, if a completely different candidate ends up getting it, because as of now, right, she's not the nominee yet, right? You have to go through the process, and it's not till late August. It's like, it's actually around like August 20th in that range when they actually pick things at the Democrat convention. So there's a whole basically month of who knows what'll happen, who gets in the race, who doesn't, all that stuff, right? So we'll see what ends up being the deal there. But it may go to be what's called a brokered convention where they have to like make the deals to figure out who it's going to be and stuff. And so markets may take, the longer that goes, it kind of creates uncertainty, right? If it looks like somebody else, markets may, get a little volatile. But for me, it's more just kind of, you and I were talking about this, and you don't give that much credence to seasonality, but I typically the first half of July is strong. The back half of July starts to get volatile. That goes into August, and then you typically sell off into mid-August, into the end of the month, and then you get that spike in September in the beginning, and then you fall apart again and get your correction into October, and then you rally, right? And to me, this year seems to be shaking up just like that. So that's why I'm just thinking it's volatile for the next couple weeks into August, and then maybe you sell off even more, complete the correction, rally into the end of the month, the beginning of September, and then go from there. But we'll see. China could try taking Taiwan tomorrow, and then you got that happening, right? Because again, you know, if there ever was a time at this point, you got some turmoil in the presidency of the U.S., right? So, the focus maybe isn't what it normally is for that sort of thing. So there's just crazy things like that can happen.
Okay, I'm gonna.
Beware the unknown right now, I would say.
It's always the what I found is the market moves on the thing that was never anticipated. It always
Right.
comes back to, oh crap, we didn't see that coming. Or
Hindsight's always 2020,
right.
right? Yeah.
It's always something that nobody like, whoa, okay, we didn't anticipate that. Because
Yeah.
everything that is known out there right now. So this is one of the things that we talk about, one of the biggest bad habits of most investors is to trade off of the news. Oh, this is going to be happening. And so therefore, 1+1 = 2. Well, guess what? 1+1 = 2. That already happened months ago. People knew about that months ago
Right.
and already priced it in. This is why like a good earnings report will sometimes sell off immediately after that. So,
Yep.
but man, there's no discounting what's about to happen here. Let me go out to the
Today's move, I will say, just along those lines, today's move it's a surprise for me. I did not think we would have I thought we would bounce this week. I did not think we would bounce the levels that we are seeing today. Like I think this morning when we initially opened and then dropped back down to where the S&P was only up like 23, 24, I thought that's the type of move that we would have,
Mhm.
We'll see how things close today. The 3 o'clock hour could be a train wreck and everything could sell off. But to bounce as much as we're seeing today, just it screams to me like people are using it to get out. And then we're going to see some selling into the later this week. That's just what my gut tells me after watching markets for all these years.
Well, here's always a way you can look at these things for those of you out there. So this is the Nasdaq, by the way, and I think the Nasdaq is going to be tough to get back over 20,000. So what you can do is you can set up a fibs from the top to the bottom in this case. And the way that we're going to look at this is we've got three major fibs that are important here. 38.2 is a very common place to bounce. So we could see this come up to here and then reject 50%. And 50% is just over 20,000. And then we've got 61.8. This to me is the last line of defense. 61.8. If you see the price going above 61.8, the probabilities favor completing the triangle, filling in the triangle all over again. Mm-hmm. So this is why we can, so at this point, you could almost draw your Darvas box like this to say just above like 20,200 would be the very last line of defense for the bears to keep control of this. Above that, it's gone. We're seeing a V bottom and the price is heading to new highs. So keep in mind.
So while you have this up, we'll go through each of the different indexes. So if you look at this, the thing that I see on these charts is you can see that the larger time frames, the weekly, the monthly, are really into exhausted levels, especially the weekly. The longer time frame, the monthly, you can actually still rally with that thing in exhaustion for a number of months. So I don't put that much credence on it, but having a weekly exhaustion, right? If you look at just, how that lines up with the last, like if you look at the dips to where, the last two times we're in exhaustion, just kind of what happens at those points, right? You have that pullback that's, that 5 to 10% that then recharges it, right? And we're just still not really there yet. So I think we've got a little bit further to go. So look at how that lines up very well.
A counter argument
with that, or sideways action, right?
Counter argument to that would be what we saw at the end of the year. The end of the year, we got into an exhaustion. We said, oh, well, that's it. So we get a 1 week wonder, and then this thing just blows up here into April. So
if you look at it, my thing there though is we walked sideways for about 4 weeks. We didn't go anywhere overall.
Where?
Before we broke out again. Just on the weekly, you can see it where it then started to charge itself up on the fly. But where you have that candle circled, you can see the week before it, the week after, that week, and then the next week was 4 weeks of going nowhere. Then you started to grind up a little bit. And so that's kind of what I'm saying is like we could be in that volatile like 4 week time frame right now where we just kind of go nowhere, but you have kind of bigger moves up and down, up and down. And that's wouldn't surprise me here. And the monthly is more exhausted than it was back then at this point.
So this is very similar to what we're going through right now. And so you could see the same kind of thing if you applied the same kind of logic to that, because we had about a week straight of going down. If we did something like that, you could see at this point, once you get above that 61.8, it's pretty much gone at that point. Now you did have a pullback to a higher low, and all that did was just incite, just inflame the bears. So I guess what I'm saying here is that for every chart, don't discount the fact, don't assume anything on here with these, because we're in a really odd environment. So we went through the NASDAQ, the SPX is kind of the same thing.
Now the Dow and the Russell it's weird. Like I said, the SPX and NDX are tracking together pretty well. The Dow and the Russell are tracking with each other, and they're in kind of a different mode. They're in a very extremely exhausted mode where the weeklies have just kind of finished releasing and their dailies are exhausted. So pulling back to recharge the daily here. So you have the initial moves last week, but you can see how exhausted the daily charts are. And so there's still like, it needs to either go sideways to down some from here, right? And then that weekly is going to be exhausted here soon. So it'll be interesting to see how these shake out because of that same thing. They're kind of the opposite, right? I would actually look for the SPX and NDX to lead while these are still kind of petering out, if you will, and having to correct more.
Yeah, the one thing I would say about the Dow, I don't want to spend too much time on the Russell because it can be really spastic and hard to chart. But the Dow should be fairly linear because a lot of people watch this. So with the 40,000 breakout, so, banging on the ceiling, banging on the ceiling, banging on the ceiling, former resistance becomes new support. So 40,000 must hold. This must hold. So Dave's right. I mean, we do have exhaustion down here on the daily chart. So I would expect to see a move sideways to down. That's exactly what's happening. But if you see the price pulling back into 40,000 or lower, that is an immediate everybody out, all exits possible, because more than likely what's happening is a wicked bull trap. And I would say this is where we see the price go to the bottom of, because you're going to see a lot of people went long on the Dow on the breakout here, and they're a little bit underwater, but if they see this thing pull back down in here, so if we get some uncertainty come in, or there's some kind of event, or like you say, there's a change at the top of the food chain, this will you're going to see it immediately, because the Dow can be a little bit thin. I mean, it's only got 30 members on it. Yeah. So you'll see this move very, very quickly here. So
I think the Dow is going to retest 40,000. I think that's an easy thing to do with this low of energy. And it could come later this week. It's participated some today. It's up like 100 points today comparatively though, but percentage wise, it's nowhere near what the rest of the markets are, like the NASDAQ and SPX are doing today, well over 1% plus. So I can see the Dow, testing that 40,000 and that being a good support level to bounce from. Same with the Russell. I mean, I know we didn't want to go too much in the Russell, but I think the Russell, you could see lower 2100s on that. I think we're kind of retesting that level around 2200 today. We're a little bit over it as of right now. I don't know where the day will end, but I think that's a nice little retest there. But this thing is just to go a 7 sigma move in like a span of 5 days. It's just super tired. Look at that energy on the daily chart. Look at it's the lowest it's been like in recent memory. So to pull back down into that level around 2100 or so would be, again, put in a really nice, and look at the weekly, and literally like less than about a week, the weekly chart is released out, right? And so coming back down to that lower 2100 range would be a awesome support level to come back down to and give yourself that higher low to bounce off of. I truly do think that the decision has been made. The rotation is into small caps. And even I think I saw Tom Lee says by the end of summer, I think he came out today. That's Fundstrat. He thinks it's going to hit 3,000 on the Russell.
No kidding.
So IWM 300, he said. So like I could see that paying out, but I just don't see us being able to go from here to there. We need to have that correction, maybe even fill that gap down there that is right by what you got on the screen there, and then find that base and then go from there.
I would say, like, same comments here. If you see the price pull down and close below 2100, I think that's going to be very, very bad. The market does not necessarily care. A lot of people get wrapped up on gaps.
Yeah.
We've got gaps that go back to 2009 that have never been filled.
Yeah.
I mean, when the market wants to leave and say goodbye, it does not necessarily give it a kiss goodbye.
You're right on that. You don't have to fill a gap. I just think that area down around right there, with the energies where they are, with where we've pulled back so far, with the bounce today, you bounce up. In fact, if you look at, I don't know if you can expand the daily chart, but it's kind of interesting, the patterns of the Russell when it breaks out like this, because it does that. It pulls back, for a few days, has that up day, and then starts to go down again, and usually ends the move down. So if you look back on this thing on the daily chart, you can really see where, it's had these crazy moves up, right? And then you see the pullback and then the bounce for a day or two, and then rolls over to the next level down. It happens when you look back, you can see it there. And, what is that? Just a few months ago. Back to October-ish, September, October-ish, right there. The breakout, the pullback, the bounce back up, and the rollover.
I mean, this is what I'm talking about. Is like this is a throw over. This is a classic engineered institutional move that gets retail to chase after that, and they just sell the hell out of it right there. And we've seen just about every single breakout here go through the same thing. And so I am concerned that, how's this one going to be different? How is this going to be different? Because, and so we'll see. We'll see if 2100 holds, then great. If it doesn't, if it comes back into the pattern, then there's no reason to think it's not going to be the same as any one of these other ones here. So that's, hey, we got a question from the Chalupa man here. So I'm going to go into, let's see, a little bit of, I'm going to do something on Bitcoin here. So everybody wants to know about Bitcoin. So back in March, I was discussing how I would like to see Bitcoin stabilize. Let's see, where's March? Oh yeah, okay. So back in March, this is what Chalupa Man was talking about. Like, I don't like to see this. So even though it's exciting when you have a runaway asset like that, all it means is that everybody's getting on board too late. When you see volume like this coming in on a move going straight up like that, that means that you're going to be in the house of pain for a while. And this is exactly what we've seen. How many months now? 3 to 4 months. 4 months of pain from here. But if you pull back and if you look at something like the monthly chart, if you look at the monthly chart on Bitcoin, this looks like a perfect flag consolidation, right? It looks gorgeous. Mm-hmm. If you were to, at some point in the future, say, okay, design me a consolidation flag, you would draw something that looks like this. This is like almost perfect. So to me, a flag is a halfway house in the middle of a trend. So you get your initial trend up, you get your flag, and then pretty much what you would expect to see is about the same distance you can append to the top of this. So last time I did this, it was about, I want to say 122,000. So I don't want to join all the other, Bitcoin scammers out there that are calling for, $1 million in the next 2 months or something like that. But the measured move target of this, what I believe to be a quality chart pattern, is 122K. So that's my thought. Now, the way that we can look at this is we can look at the RSI Laguerre, and the monthly chart is almost there. Now, I've got a period of 9 on this, which I don't know if that's correct or not, but we'll see. We'll find out in time whether it's going to be somewhere between 9 and 14. But so far, we're almost there. We're almost there, and I think depending on what happens, if we get a more favorable administration to crypto or digital assets into the market in the next few months here, I think you will see crypto take off. The Elizabeth Warrens will fade into the background. The Gary Genslers will fade into the background. All these opposing forces that want a digital currency. So what are we calling those things again? The digital dollar. What do you call those again, Dave?
What for? Talking about? Oh, you're talking about the federal.
Right.
Yeah, the Fed coin or the. Yes. Now I'm blanking on. Somebody will probably pop it in the chat, but it's the. It's basically the digital dollar, the central bank digital currency. Thank you very much. CBDCs.
CBDC. Right. That's it.
Yep.
So that's which is a bad thing, right? We don't want central bank currencies because
that's the thing. Trump. That's one of the reasons that things really bounced after the nomination of JD Vance for vice president, because he's bullish Bitcoin. He's a big advocate for Bitcoin. Trump has said no CBDCs, so adding Vance in that is beneficial for Bitcoin and digital currencies, non-CBDC. And so that's why we've seen this nice little bounce in it. So now it's just, can we get over the hump, right? I think 70, 71 is it. And I think, it's funny, you and I were talking when it was at 56, and I'm like, what are you seeing in the charts? And you're like, it's it's a weekly swing lower at support. So I went in and bought some more, and I'm glad I did. On that, that was a really great spot. But I think we are, we're kind of at that point now. Can we truly get over that 70, 72K hump? And if we can, and this thing goes up to like 80, then I think, that those calls for 100,000 by the end of the year are probably going to be right.
This is actually one of your signals that you talk about all the time. Here's the Bollinger Bands, and the price on the weekly chart of the Bollinger Bands went down to the weekly lower Bollinger. And so this is where I was starting to come out of my gourd and saying, hey guys, here's a signal. I know it feels bad, but here's the signal. And so this is everything that you were, ever wanted.
Look at that Bollinger Band squeeze though. Look at the last squeeze that it squeezed, and look at how much it popped out of there. And it's definitely,
it is. I'm telling you, actually Bitcoin is one of the better charting assets that are out there. Not all of there's only a few majors that chart well in crypto. A lot of them are just crap because there's no business model behind them, and it's pure speculation. But some of the majors, the top 5 majors, are actually really, really good on charting for crypto. So, okay, we have just about played out our time here. So, want to remind guys. Now, I will be here next week. Dave will not. Dave's going to be doing another, you're going to be doing another, you're on vacation.
Right? No, I'm actually taking a real vacation. So those of my students know that typically when I go on vacation, markets act up. So next week should be a really crazy week in the markets. So I'll probably stick to pretty safe trading. Those of you guys are watching, like today, I didn't even put out a 50-50 because of what Biden did yesterday. And so I didn't even waste my time on that trade because I don't want to deal with that, in the coming weeks if we're going to get craziness. So for those watching, I'll wait till Friday and do my normal trades this week and, try to keep them fairly safe, and just kind of I'm staying light in this market. I'm still waiting for some really true signals to show up. I mean, this is, we haven't put in a true bottom yet. I don't think we're breaking out to a new high yet. I want to see confirmation before I really go in on a number of things. So I'm just keeping powder dry, getting ready. Sometimes the best trades are not to trade at all. And so I've kind of, the last week or so, I've kind of gone to that, and I'm like, let's see how this shakes out, and I think it's been good to do that. So, yep.
Yeah, cash is a position. That's what they always say, and this may be
Yeah.
a good time for that. So,
And as we're saying this right now, that 3 o'clock hit, and we are selling down from the highs of the day. So we'll see where we end. Yeah, S&P is down 10 points in the last few minutes. So we'll see if we sell down to close, or if we just get this early selling in 3 o'clock and then buy it back up into close. It'll be a fun 15 minutes, the last 15 minutes today. So you guys are paying attention, watch it. I love watching those 15 minutes. You learn a lot as a trader there.
that's true. That's true. All right, everybody. Hey, thanks very much for joining us here today. And of course, for those of you that are watching from home on a replay, before next week's session, go ahead and fire a question in to our support line, and I'll be happy to tackle it. All right, thanks everybody. You guys have a great Monday. Hope you have a great week, and stay on the keep the rubber side down, guys. Take care now.